Hey, what's going on, you guys? Josh the Trader back with another video for you. And today I want to talk about how I think newer traders should be approaching the markets in order to give themselves a better chance of day trading success and longevity. A couple of the key points we're going to hit on in this video are individualism, mindset, reality, and persistence. Before we get started, I want to quickly just say that, I'm an average day trader. I do trade full time, but I am not a guru by any means. And I don't want to push that persona onto you guys. And lastly, all this information is a product of my experiences and my studying. So it's okay to disagree with me. And if you do like this information, then feel free to take it and run with it, because I think there's going to be some great points we're going to hit on in this video. So with those things out of the way, let's go ahead and jump into the first point here. All right, the first key point we're going to hit on is individualism. Not everyone trades the same. And although we tend to learn from the same successful gurus and traders, no one trades the same stocks the same way. And there's a million ways to skin a cat in a sense, right? It's okay to garner ideas from successful traders. As a matter of fact, that's what you should be doing. Search around, do your research, and find a trader who's successfully trading in a manner that makes sense to you. Once you find a style of trading that complements who you are as a person, the next step is to make it your own. Take the concepts the guru provides and mold them into a strategy that is conclusive to your portfolio size, your risk tolerance, and your experience. Once you think you have something solid sorted out, take these theories to the market and verify them through something like paper trading, right? You may disagree with certain individuals about the way they do things. Hell, you might even disagree with me. And that's perfectly fine, right? There are few things in the stock market that are finite. Do your research and find out what works for you. All right, the next key point to hit on is mindset. There's no such thing as getting rich quick in the stock market. It's a marathon, not a sprint. If you're trying to make a sustainable amount of money trading, then you must have the right attitude when approaching stocks. This is a dog-eat-dog environment, right? Some of the smartest minds in the world have dedicated decades of their lives trying to profitably navigate the stock market. And if you have the impression that you could walk into the market and turn $1,000 into 100 grand after only studying haphazardly for 3 months, then you're in for a rude awakening. Coming into the stock market with the mindset of I'm going to make money today is kind of the wrong answer, right? Instead, you should be thinking I'm going to trade properly today. If you focus on the right setups and get good entries, then the money will come. However, if you focus on your P&L, then you will inevitably lose money, right? You're going to assume that you did something wrong, and when in reality you might have done everything right, and maybe the market just didn't want to pay out that day. So everyone takes losses in the market, but if you focus on trading well and following the rules, then the losses will be significantly smaller and the profits will be substantially larger. All right, the next key point to hit on is reality. Most traders enjoy spending a majority of their time on fundamental and technical analysis. However, when it comes down to things such as planning a trade and emotional training, most traders skip these critical aspects, right? If you ask most successful traders which part is more important, technical fundamental analysis or having a plan and controlling your emotions, you'll be hard-pressed to find a successful trader who would advocate for more time spent on the analysis side. The reason most traders fail in the market is because the reality is that most traders don't know how to control their emotions. When they're in a trade and their profit and loss is swinging around, their heart rate and their emotional state is just as erratic, right? We probably heard the terms thousands of times by now, holding and hoping, taking profits too early and taking losses too late, FOMO, fear of missing out, freezing up, panicking out, overtrading. These are some of the most prolific reasons why traders are losing in the market, and they're blowing up their accounts. And all these reasons stem from the same root cause, which are emotions. Ask yourself, how much time have you spent learning the technical fundamental side of trading, and how much time have you dedicated to understanding the emotional aspect of trading? I would wager that most of us, including me, have spent more time studying charts compared to learning how to control our emotions and learning how to plan a proper and manage a proper trade. So it's really important to make sure that you hit those points and have a good balance between emotional training and planning a trade, and having a balance between learning how to read fundamental aspects of trades and learning how to understand technical analysis. All right, and the last key point to hit on is persistence, right? The founder of McDonald's, Ray Kroc, who grew McDonald's into the world's second largest fast food chain, losing to Subway, said that nothing in this world can take the place of good old persistence. And persistence is an attribute that you can find in almost every single successful trader that exists today. Now, they all have a story, and in most of their stories, they had a time or two where things were not working out for them and it seemed like everything was going wrong. However, something interesting happens, right? Instead of throwing their hands up in defeat, these traders kind of leaned into it when things were going wrong and kind of leaned into the problems and the stress and the failures and attack their problems and mistakes head on, right? And if you want to be successful in the stock market, in my opinion, you must be persistent. All right, guys, that just about wraps it up. Thanks for watching. I appreciate you guys taking the time to check this out. Go ahead and like and subscribe and leave me a comment and let me know what you guys think. But until next time, be safe, and I'll see you all in the next video.